Why you still struggle to raise capital in real estate even with a great deal. You don't raise capital by having the best deal. You raise it by becoming the person the investor trusts to protect theirs. But no one wires money because you're loud. Capital doesn't chase returns. It follows certainty. And certainty isn't it in the spreadsheets. It's in the energy you bring to the room, to the table, to the presentation. When I raised my first $5 million in 30 days, the pressure was real. We had over $500,000 in escrow or in just weeks to close, or we will lose the money. And it wasn't just my money on the line. My friends had invested, people who trusted. And honestly, the deal wasn't flashy. The numbers were strong. My clarity was unshakable. Every meeting, every word, every move, I transfer conviction. I didn't pitch, I led. And that's when the capital moved. So if you know your numbers and you have done the deals, but you still feel that there's invisible resistance, it's not about competence anymore. It's about leadership that feels clear, grounded, and aligned. And in the next 15 minutes, I'm going to share with you how to stop chasing investors and start becoming the kind of leader they choose to follow. Because when you lead with precision, clarity, and calm, capital doesn't hesitate, it commits. Here's the reason why investors don't wire money. People don't just invest in deals. They invest in the leader that who feels solid enough to protect their capital and bold enough to grow it. So if you ever had an investor said, "This looks great, but I'm going to pass," it probably wasn't about the returns itself. It was how they felt in the room with you. Let's get into it. Why solid deals still get ghosted and how to shift from being overlooked to fully funded. The brains make financial decisions through 3 filters. The number one, breadth. This is risk. They're scanning what's missing here, what's being rushed. If anything feels off, they're gonna pause. The second thing investors are thinking is this is enough reward? Is this worth it? Not just the returns. They're asking if this is worth the time, risk, or complexity right now. And number 3 is fairness. This is a win-win. They don't want to bankroll your dream while holding all the risks. They want alignment, clarity, skin in the game. And if you look at the stats, 69% of accredited investors said trust and transparency matter more than return projections. And from what I have seen, a smart capital doesn't chase the hype. It follows the person who is holding the compass. Because even if the spreadsheet sinks and it looks awesome, what they're really asking is, can I trust you to walk this across the finish line? So yes, the numbers matter, but stop leading with them. Lead with clarity, lead with stewardship, with structure. The second thing why it's important that you understand how investors think is asking your question, why capital follows conviction, no forecast. Capital doesn't follow the loudest person in the room, follows the calmest one, the one with the clearest map. And here's the mistake most people make. They sell the deal, the forecasts, but forget to leave the room. And your job isn't it to impress, it's to transfer certainty. And one of the fastest ways to do that is show your expertise through what I call a leadership drop. And it's a moment where you answer questions briefly, clearly, and you answer at least 3 things. 1, have you done something like this before? And the second thing is, do you speak the language of this deal? Not jargon, just clarity. And can you walk me through the timeline, budget, and risk in under a minute? I don't need dissertation. And this is the kind of things that the investors are thinking. I'm gonna give you an example. We got into a deal in Austin, Texas, and here's the leadership drop. We just wrapped a similar lot in East Austin. It's a single family home, zoning 3, 4,200 square feet, had permitting delays, trimmed the scope, still exited in 9 months with a 22% internal rate of return. And this one is almost identical, but we have added a pool to protect margin and cut time on market. People, this is not hype, that's precision. And when you lead with that kind of clarity, investors relax. They lean in and they start mentally wiring before you even ask, because they can see your expertise. They know what you're talking about. Here's the number 3. What actually builds trust and what destroys it. People don't buy into a deal, they buy into alignment. And trust isn't built in your pitch deck. It's built in the moments, in the micro moments that you answer the hard questions, and how you respond when something shifts, how you name risks before they have to. If your energy is rushed, grasping, or vague, all of this, they feel it. Even if they want to think that everything is no emotional, that's what happened. Even if your spreadsheet shines, but if you show clear, if your answers are grounded, if your energy says, I know what I'm doing and I'm not here to prove it, that's when the investors stop evaluating and start aligning. Ask yourself, are you clear on your walkaway line if a deal doesn't feel right? Another question that's important for you, do you know your numbers and your values about the deal? How would you respond? How will that lead? And would you invest with the version of you that just walked into that room, into that meeting, into that conversation, into that phone call? Because the investor might not say it out loud, but they will feel the truth. So what is your real move? You have to lead with stewardship. Let your calm be the signal. Let your integrity do the differentiating thing. And another thing I'm going to address today is, how do you turn objections into a lie? Objections are not rejections, they're a reflection. So let's stop fearing objections. They're not walls, they're windows. They show exactly where the fear is, where clarity is missing, where past experiences are still in the room. And you don't need to fight objections. You need to understand them. You need to approach them with curiosity, right? You can frame it as a clue. For example, hey, it sounds like you're wondering if the timeline will really hold. Has that come up in past deals? You want to also share from the truth, not the tactics. There's so many tactics and people fight it so much. Here's another example. That's fair. On our last one, we planned for 12 months but closing 9 months, and that same buffer building into this. Also invite to share a vision. This is not about you or me convincing them. It's about seeing if this is the right move for both of us, because this is an opportunity, a relationship. Your response is grounded and not performative. I have to tell you, objections soften, trust builds, and the right capital step forward. Here's what I have learned. When I first started raising capital, I thought I had to earn my place. I have to know more numbers, more cold, I have to be more polished. But the shift came when I stopped performing and started leading. And yes, I learned all of those things, but it wasn't perfect leadership. It wasn't scripted leadership. It was embodied, clear, calm, and aligned. And that's when the phone started ringing. Jen, when is your next deal? That's when the DMs turn into wire transfer. And that's when investors who have been watching in silence finally says, I don't know what it is, but Jen, I trust you. They were not buying my deal. They were following my clarity. And I want to share with you, if this landed with you, I want to encourage you to watch our other videos over here. And I walk you through our method, right? Our magnetic position, our alignment protocol, our proof of process. I give a lot of insight and tips in this video and list. So let's make sure that you learn more about how to raise capital property, because when you lead with alignment and urgency, capital doesn't wait, it follows you.